Hello everyone, welcome to Smart Investing. I'm Albert and today's video is going to be about the auto and truck parts industry. Today is July 30th, 2024, Wednesday. It is 9:30 a.m. Well, 9:33 a.m. and markets are open. Let me see, hold on, I have a little glare. It's pretty sunny here in Florida. There we go. So today's stocks, we're going to go over four stocks. We're going to go over these four, and we're going to start with ticker symbol FLYE and then work our way down or up. We'll go down. So first ticker symbol that we're going to go over, ticker symbol FLYE, FLYE Group. Looking at these numbers, barely positive earnings. Market cap is at 23 million. Micro cap company. These are companies that Wall Street doesn't like. 52-week high was $7.62. 52-week low was 88 cents. So we're only looking at a difference of, for the whole year, not even $8. Moving on to the chart, I'm pretty sure it has not moved much. Actually, this stock released this year. Oh no, let me see something. So yeah, it did release this year back in June, so this stock is pretty new. You can see the stock tanked recently, the past few days. I mean, it's not by much, but if you look at the chart, it went from $1.20 all the way to around, I don't know, 92 cents. So that's like a 30-cent drop, which looks pretty huge. So we're gonna move on from that. So the charting looks bad. The numbers look pretty bad. Fundamentals would help for this company to grow. I don't know why they gave this a high rating for a quality of 9.3, and the growth was 9.6. Overall rating, I don't have nothing for income, nothing for momentum. But this stock is already ranked a 5 out of 5. I highly doubt this. So this is very inaccurate here when I don't have all the factors that play into the quant rating. Looking at the financials, let's look at the annual in 2023. I thought this company came out in 2024. Well, anyways, they're showing numbers from 2023. So earnings are 0.05 positive earnings, but they have to do better than that. Margins are at about 6.3. Their debt is pretty high, so they have very high debt levels. They need to get rid of that. Income statement is at 1.3. Revenue at 21.7. So I don't know. I mean, revenue looks promising. Net income, very drastic changes, really nice. I mean, really big difference from basically $500,000 to almost 1.5. Tripled their net income. If they keep up numbers like that for the net income, who knows? They might do okay. We have balance sheet 85% that debt has to go, which I understand for companies like that. Operating cash flow 1.76. Then we have 1.35. So cash flow positive. So that's a good thing. This company needs some work, but again, Wall Street doesn't like it. Hopefully in a few years, this company can have a better market cap and better earnings and better revenue. So for now, I'm not saying this is a bad company, but if I had to choose, I would not put it at the watch list at this time. But again, you can't count this company out as of right now because it looks like they just released this ticker symbol, and it just, it's still pretty new, so it needs time to be evaluated and it needs time to be proven good or bad. Next stock up that we have is ticker symbol SLDP, Solid Power Inc. So this stock we have at market cap 325 million. 52-week high and low looks pretty awful. Only a $3 difference, less than that. That's not really appealing to investors. Earnings are negative. Obviously, they're not going to pay dividends because this company is not really established. The volume looks okay for a company that size. I would have expected less. PE ratios, I have nothing given to me. Let's look at the charting here. Let's see here. Let's look at the last 5 years. We went from $14 or close to, well, 13 and change. A few years later, downtrending. So the breaking point was actually in 2021 in December, and then you see from there try to be neutral, and then it just wound up going down even further. We have further confirmation right here at about July, early July in 2022, and then the final confirmation here by November in 2022. Well, really October, but early October all the way to November in 2022, and that is it. If it breaks further down below 1.15, I mean, we're gonna see further decline. You can see it's tiptoeing, trying to tiptoe, breaking out this range here at about, I don't know, $2. Hasn't reached that quite yet. Once it'll reach like $2, I think then we can say that, you know, it might be going somewhere. But as of right now, things look pretty bad for this stock on technicals. Moving on to the analysis here, we have 4 analyst ratings. We have the 2 people recommending a buy, and then 2 people recommending this as a hold. Quant ratings, we have value 4.7, momentum 3.3, quality at 3.79, almost like a 3.8. So highest rating that they have here is 4.7. I can't quite agree with that since this company has not been proven. Let's go over some fundamentals. We have here the gap. Earnings have resulted in downtrends, and then estimates have risen for this company. So it's getting hard on Main Street. We're gonna look at some key indicators here. ROA negative, negative numbers even for EPS. Net margins awful. The debt is really, really low. That's really good. Even for the past 3 years, lower down their debt. That is a good sign, but again, they just have to be proven for profitability, and maybe this company can head somewhere. But as of right now, this company needs a lot of work aside from the debt. Again, nice balance sheet, but they have a long ways to go. Looking at the cash flow here, operating, we have negative numbers 5 years in a row for operating cash flow. Then let's see here, they're operating at negative cash flow, negative, so that is not a good sign. The company needs a lot of work. Again, this is a company I do not recommend to add to your watch list. Moving on to the next one, we have ticker symbol, it messes me up, so we're gonna go with ticker symbol LEVWS. This stock is only a penny. As you can see, downtrend, I mean, from $14 starting in 2021. Obviously 2021, the last 5 years, that was the best year, and I doubt we're gonna see numbers and charts looking like that. We have a decline of like more than 1,000%. I mean, from $14 and change all the way to a penny. Market cap is not even showing me. It looks pretty awful. Then we have the volume, awful as well. I'm having no numbers. Earnings are negative. I mean, it's not even showing me anything. 52-week high and low of about 30 cents. It's not even worth looking at this stock. So far on paper, and again, this is only a second ticker symbol. I'm sure they have a main ticker symbol. So this is like a secondary listing for this company. So we have, I'm not even going to show that. It doesn't even have it. You can have fundamentals. So awful chart, awful numbers. Quants are better awful. Estimates are pretty flat. And actual results, pretty mixed. I mean, they've downtrend, and now Q1 for this year, they missed. We're gonna look at some key indicators here. ROA, negative 13%, negative 26 ROE. So we have from assets, so what they have from the actual company, ROE, return on equity, that's depending on management, the actual people that make decisions to improve the company. So double whammy there. Earnings, negative. That's expected for a slow starting company like this. Net margins look awful. I mean, negative 40%. Debt, 57%. Pretty typical. I don't want to see them take more debt than that. I mean, in 2020, you can clearly see, I don't know how that number came about, of 175% debt. I mean, they doubled their debt, I guess. So that looked pretty bad in 2020. And then, in 2021, I guess, stocks went up in 2020 and 2021. So they probably cashed out. And, even though they try to improve their debt, overall numbers still looking bad. Net income negative 103. Balance sheet needs a lot of work. Operating cash flow, so we have negative 110. Investing is negative 123. So they are operating at a negative cash flow. Sorry for my handwriting. So we have here another company, ticker symbol LEVWS. So again, do not add that one to the watch list. So far, only one company looks okay. Ticker symbol for the last one, ticker symbol we're going over, GOEVW. Company is also known as Canoo. No volume, no market cap. I'm not getting any numbers whatsoever, and you can clearly see markets are open at this time. Nothing. I'm not getting any PE, nothing. No numbers at all. The stock, all I can go off of is the price at 5 cents. Yeah, I don't think so. If it's not showing me any info, it's not even worth looking at. Plain and simple. 2021, we have $6, and then the downtrend. It tried to kick up in 2022, and then it went right back down again. For the year, really mixed numbers here. Again, not even worth it. What, just to gain a penny in, penny out, penny in, penny out. Pretty awful chart. I don't see this company growing at all. I don't even have actual numbers, so I have nothing to go off of. Let's look at the company earnings. I always use general guidelines for accounting practices. So you can see here, I clicked on the GAAP instead of non-GAAP. Estimates that are expected for this company are uptrending, and then you can clearly see mixed results, which is not bad. They're trying to gain momentum there. I guess trying to make improvements. Annual numbers, negative 58 for ROA. ROE is negative 124. Awful numbers. Net margins are negative 34. Like, how do you even get that? I don't even know if that's a typo or not. I've never seen net margins that huge like that. Obviously, they're having trouble. So debt to asset at 54%. The debt keeps going up, and that's not something I'd like to see. We're gonna move on to net income, negative 302. And you can clearly see the last 5 years negative numbers. Only in 2019 they were positive, slightly positive, which was good. They were on their way, and then they declined from there. Revenue at 886,000. Sorry, I'm getting bit out here. In 2023 revenue, and then I got nothing for 2022 for the revenue. 2021, everything looks pretty awful, needs a lot of work. Balance sheet is at 54% again compared to their assets. Then we have their operating cash flow at negative 251, so we have that added on to negative 70. So they are operating at negative cash flow. I can't do the exact number, hold on. So 250 and 7, so that's 22. So we're looking at about negative 60 million in negative cash flow. Negative 60 mil. So they got work to do. Doesn't look good. And let's read about the company before we move on. So Canoo is a mobility technology company. They look like they're trying to make EVs, and it just hasn't done anything as of yet. So there you have it. I need more numbers on this company, at least a market cap and some volume, and better charting on this. So there you have it. Thank you guys for watching. Again, for this stock, do not add to the watch list. One of them needs improvement. I'm gonna make a shorter video after I get out of work. Thank you guys for watching. I'll see you guys in the next one.